Welcome to the Hot Dish, comfort food for rural America. I'm Heidi Heitkamp.
And I'm Joel Heitkamp. Today we get a chance to, and we're delighted to visit with Justin Wolfers. Now, Justin is a professor of economics and public policy at the Ford School of Public Policy at the University of Michigan. He's a senior fellow at the Brookings Institute and a contributor to the New York Times, the Wall Street Journal, and he's a regular on CNN. Justin, welcome to the Hot Dish.
Mate, this is exciting.
Well, it's exciting as all get out for Heidi. Heidi's only got, 100 questions for you, Justin?
Yeah, I think you know, Justin, I'm kind of an econ geek. I think that one of the big mistakes that our political party, the Democratic Party, has made is not paying attention to what's been going on. I think Biden completely missed what was going on with inflation, with people's real life inability to make ends meet. I think Trump's doing a little bit of that. But before we get there, when I was in the Senate, Trump was elected, and there was always every day it was the best economy in the history of the world. Look what we've done. Look what we've done. And this was even before COVID. And I went to my leadership and I said, that is absolutely not true. It's not the worst, but it's anemic. But yet he gets by with it day after day by basically saying it over and over again. And that's why it's so important to have people like you on podcasts like this, but also speaking kind of publicly about what is the state of the American economy and what can we expect in the next 3 years in terms of the direction that this administration's taken us. So if you could just kind of comment on, kind of where Trump's economy is right now and what you think some of the pitfalls are going to be kind of going forward.
Yeah, I want to tell a sort of optimistic story. I agree with you, Heidi, that we on the centre left should be not only economically literate, but truthful. And sometimes the glass is half full. I'll tell a more sympathetic story for you, which is that President Trump inherited a pretty strong economy, that we had largely recovered from COVID. And there was a lot of bad stuff in the system from COVID. The unemployment rate was quite low when he came to power, and the economy has not dramatically shifted. Inflation had fallen to around about 3%, which is almost acceptable. And what's happened since is actually just a really hard story. It's hard because there's been so much that's happened, and trying to keep track of it all. And some of those things actually distort the way that economic data ends up getting reported and so on. So I'd say, let me start at the top line and say it's a B+. It's a B+ with a lot of risk and a lot more downside risk than upside risk. So most people who want jobs can find them at the moment. Yeah, big part of that, most means not everyone. The cost of living is rising, but it's not rising at tragically high rates, but it's rising at concerningly high rates. But the president has thrown a lot of mud at the wall, mud of the form that you think might hurt an economy. And so even as the hard data continue to look okay, that's the B+, if you ask people how they're doing, and here it could be regular folks listening to the podcast, or it could be CEOs, actually, their answers are unbelievably miserable. They're sort of recession level miserable. And so if your sense of how the economy is going comes from asking people, you would say it's going absolutely terrible. And then if you talk to my tribe, the economists, we'd say he's put in train a whole lot of things that are really going to hurt the economy. So it might be a B+ today, but gee, look out, because the future might be not even in the B range.
Well, it's like that old story. How did you go bankrupt? A little bit at first, but then really fast. And so a lot of what you're seeing right now in those numbers is, again, this growing gap between affordability for people in the lower half of our income category and the, kind of this K-shaped. And if you could just comment on, because a lot of people are hearing about the K-shaped economy, if you could just comment on what exactly is that, and how does that drive something like the University of Michigan Index of Consumer Sentiment?
Yeah, so let's start by explaining what a K-shaped economy is. First of all, there's a whole lot of economists on Wall Street, and you get quoted the most if you come up with the catchiest name. And one of them came up with this idea, K-shaped. And the reason it's catchy is because it's so confusing. What does a letter K look like? Well, the leg stands up tall. That's where we were. And then you've got these two other things coming out at different angles. One's going up and one's going down. And that's the story that the one that started at the top, which is in our case the wealthy, are doing pretty well. That stocks have been rising, their portfolios are worth a lot. They've gotten all these tax cuts from their one big beautiful bill. Life's pretty good if you've got a lot. The other part of the K, the lower part, kicks down, which is, is this a recession for working and middle class Americans? I'm pretty sure Joel's going to talk about, is it a recession for rural folks? And so if what we see is some doing well and some doing poorly, we call it a K-shaped economy. I'm somewhat concerned about that, and I understand the political salience of it, but actually I'm not as convinced that the differences are that large. I would simplify things. I'd say when you pass a budget that gives huge tax cuts to the rich and nothing to the poor, when you pass a budget that cuts Medicaid that only hurts the poor by cutting Medicaid, and when you impose a new tax policy that's tariffs, and tariffs are regressive and they hurt the poor rather than the rich, then you help the rich and you hurt the poor. The problem with the rhetoric of a K-shaped economy is it sounds like the economy's doing the work. The economy's not doing the work, the president's doing the work, and the president's party, they're the anti-Robin Hood, and that's what we're seeing around us right now.
Justin, I don't want to play poker against you because clearly you know what I do or what I'm about to do, and that's to talk about the real economy. We can talk about 3%, we can talk about all of that, but I think to understand it and to get back to the real economy, maybe in just a step, you gotta let me know, what did he do, which is going to, make us sit there and wonder why we're not even at a B.
Let's look forward, because it's forward where my fears lie. Look, we're only a few months into the Trump administration. Economic data lags. We don't know what the president's agenda is going to wreak upon the economy, but we have a lot of fears. So I want to take the question in two parts. One is the short to medium run. So tariffs are immensely destructive. Statement number one, particularly, it can, at times, if we're tariffing the inputs that farmers use, be a big effect on the rural economy. We also know that this immigration crackdown is a huge shock at a moment when we might not be ready for it. If there's something we learned from COVID, it's that you can't just unplug an economy and plug it back in and hope that it's going to work really well the second time. With that, we want to be a little more gentle in what you're doing. And so it's creating, I think, incredible tumult there. And so you've then got, so all of that, I think, sort of has led people to be somewhat worried about the medium run. We use words like recession. Are we concerned that there may be one around the corner? I actually want to focus you even further down the road than that. And this is unusual, and I think it's a politically difficult conversation to have. But I want you to take a step back and think, what is it that makes America rich? There's a deep question. Why is America rich in the country that I was born in, Papua New Guinea, poor? The answer, according to most economic research, is the quality of our economic and political institutions, that we respect the rule of law, that we have contracts that are respected, that we have a functional government, that we have useful infrastructure, and on the list goes. The United States has that. Poor countries don't have that. That's the foundation of our prosperity. The president is undoing many of those important institutions. The president has fired the head of the Bureau of Labor Statistics, potentially sending the signal, don't tell the truth when you're in government. The president has had a go at Jay Powell and the Federal Reserve over and over again. This has been a Fed that, love it or hate it, has done better than most other Federal Reserves around the country, around the world. When the CEO of Intel walked into the White House, he walked out having accidentally left 10% of his company behind. And that's not a sign of a healthy democracy. When you talk to business executives around the country, they talk about Trump a lot. Do you remember in the old days when business people would get together, they would not talk about the president because the president was some boring guy in Washington? They're worried, do we have the right bathroom policy to please the president? Do we buy our imports from the right country to please the president? Does the president think that Coca-Cola should use the right sweetener? Which sweetener does the president think Coca-Cola should use? The president's intervention in every aspect of corporate life has come to dominate the operational roles of executives. They're focused now on pleasing Washington rather than their customers.
Well, it's not really pleasing Washington. It's pleasing one man in Washington.
And maybe it's
and
more
if you give
accurate
them
to
a
say,
nice Rolex watch, I guess, with some gold bar, you get a really good trade deal. That's what I heard.
It's absolutely the case. And it's worse than that, because you could say, well, if that's the price of doing business, then just everyone turn up with a watch and you'll be fine. The problem is that the president is mates. He calls in, let me go back a step. What was his previous job? He used to run the Trump organization. He's a bloke in an office in New York, and, some guy would come in and say, hey, Trump vodka's doing well. Let's do more Trump vodka. And go, oh, yes, let's do that. And then he'd have another CEO come in and say, oh, well, our downtown golf property's working well. Let's do more of that. And he thought his job was to manage each of these executives. And it was when he ran the Trump organization. He now governs as if his job is to manage the country's CEOs. He calls in Tim Cook whenever he feels like it. He calls in the head of OpenAI. He calls in the head of Coca-Cola and tells them that they should be using real sugar. The problem is, the good thing is each of those guys, they bring in a Rolex or a bar of gold, and the bloke's happy and he lets them go on. The problem is, think about who doesn't have access to that. It's the young companies. It's the entrepreneurial companies. It's the small companies. And to borrow a phrase from my Republican friends, it's the unborn, which is tomorrow's superstar company hasn't been born yet. And it can't thrive if its existing rivals is getting protection from a White House that's giving out favors like that. And so the reason this is a difficult economic story to tell is it says that the damage being done by the White House is not something that's going to show up in next quarter's GDP or next year's federal budget. It's going to show up as lost opportunities in 10 or 20 years' time. It's going to show up as the company your kids don't have an opportunity to go and work for because the company never grew because it got bullied by the existing, by Apple or by Coke or the existing companies that have an in with the White House. There's a deep sickness at the heart of crony capitalism. It means that you're not focused on building a better mousetrap. You're focused on bringing a better Rolex. And that is what I worry most about.
I was talking right after the whole thing with Intel and with NVIDIA and, these interventions that we've never seen before. And I said, okay, let's flip the switch. Let's assume it's a Democratic president. And he goes to the head of Starbucks and says, hey, you can't grow coffee in our country. We're going to tariff coffee 1,000% if you don't allow unionization in every one of your shops. And those same people who have tolerated this and the lack of resistance because everybody has become transactional without thinking about what does the future look like. The real question becomes, Justin, how do you put it back? How do you go back to the norms that were established for capitalism, and that everybody kind of played by the rules, with fudging a little bit on the guardrails, but not like this. Not like this.
So I worry deeply about this, Heidi, and I'm going to show you how upside down the world is. Where's Ronald Reagan? And that's kind of crazy. I'm a center-left economist. You're, we know where your politics lie, but Reagan would have been against every word of this. Reagan believed in markets. Reagan believed in competition. Reagan believed in trade. Reagan believed in immigration. And so what's happening is the voice of Reagan is gone. And guess who the faint echoes of Reagan are today? It's you and I. Quite literally, the people standing up for Reagan's ideas are center-left economists.
Well, think about this. Think about the fact that for years we said the era of big government is over, and Trump with one magic wand has brought big government back to the front. And you can't say it any other way, that this is government intervention in almost every aspect of civil society that we have never seen before. And then the question becomes, does it establish a new norm?
Absolutely. So you're absolutely right to say this is the most interventionist government of my lifetime. It's not only taking 10% of Intel, it's calling the University of Michigan and telling it who to hire and what should be on our syllabus. We have some brilliant academics here. We don't need Washington telling us how to teach. And we're doing that throughout the economy. We're telling Apple where to put their factories. We're messing with American soybean farmers in all sorts of ways. We're changing the cost of the inputs. We are forcing companies to build where they don't want to build, and on it goes. And Heidi, you're right. What happens next is, I think, the deepest and most important question. And I don't know the answer because my Republican friends haven't thought through the next stage of this game, which is there'll be a Democratic administration in the future. What I hope they do is put in place great institutions and great policies and build wealth and prosperity for all of us. But if they don't feel the guardrails of the past as binding them anymore, that could create all sorts of other problems, different problems, right? Maybe we'll end up nationalizing industries that are treating Democrats the wrong way. Who the hell knows? So I don't know how I can persuade Democrats to fix this problem, because politics can't be that asymmetric. You guys get to do whatever you want when you're in, and we'll play by the rules when we're in. I think, I don't have this is why I don't sleep at night, Heidi. In my fantasies, the Republican Party that I grew up understanding, the party of Reagan, comes back to life. And we go back to, it wasn't a perfect politics, but I will take the Clinton, Bush, Obama years over the current madness any day of the week. And I say that as an economist thinking about our economic future.
So you're right. I'm going to bring in, rural economy. You talked about 3%. It isn't 3% here. If you look at fertilizer, if you look at the cost of equipment, if you look at everything else that goes with it, it's far exceeding 3%. If you look at immigration, I don't think people understand how much immigrants play a role in the rural economy and in the labor force. And so, between tariffs, which have been devastating to the rural economy, and just this philosophy that you can pay them off. Because really, that happened in the first Trump administration. When it came to soybeans, Wilbur Ross said, hey, just pay them off. And he gave I think it was $1.62 to every farmer per bushel of soybeans. And what did that do to our soybean market? We lost a bigger share to Brazil. Here we sit again. The amount of trade that we're going to do with Argentina, with the worthless bonds that they have, or the worthless money that they have, granted 40 billion, is it that big a deal? The amount of cattle, those type of issues, but it doesn't change what farmers think in regards to how they can farm. So the rural economy. And I would also add this, Justin, that a lot of the people that I talk to every day on my radio show buy their insurance off the exchange. They do.
Mm-hmm.
They've got 5 employees, they've got themselves. They don't have a wife that goes to town, not to sound like a complete sexist, but that does happen, where her only goal is to find a job that provides them health insurance and maybe make a buck or two. But if you look at the rural economy, there aren't a lot of pickups getting sold. There aren't a lot of tractors getting sold. And there aren't as many soybeans as getting sold as what there should be. And so I'm curious what your thoughts are on that.
I want to introduce another word that is uncomfortable for an economist to talk about, but I think is a key part of all this, is actually just the word competence. We've had Democratic and Republican leaders for hundreds of years, and they've mostly been competent, and that's fine. Some of them I agree with, some of them I disagree with. Who cares? The problem of competence really comes to the fore for a lot of the issues you just described. So let's start with soybeans and then go to health insurance. So with soybeans, last time around, Trump started the trade war with China. China retaliated by not buying soybeans. Trump backed down, went to China and said, how can we get you to do this? And got commitments from China to buy brickloads of soybeans. Over the ensuing 2 years of that agreement, China actually bought fewer soybeans than it had before. The agreement delivered zero to the American people. It delivered a lot of headlines to the president, who got to say he solved a problem he caused. But the guy's just not very good when he's in a room. He got totally played by the Chinese. This isn't the first term. Well, luckily, we all learn from history. So we come forward. He starts a new trade war. China decides that the easiest thing to do is go after the soybean farmers. Trump realizes this is politically unsustainable. He goes to China, and do you know what he's come back with?
Nothing.
A set of promises that are completely unenforceable. And China will buy whatever the hell they want going forward. He got his positive headlines. He's fine. And soybean farmers, the new set of commitments, by the way, is a commitment to buy fewer soybeans next year than they were buying in 2019. So it's actually not even to get back to where we were. And they've shown they don't necessarily need to live up to these commitments. And so that sector just got flattened for literally no reason and no upside. And that's not about left or right. It's not about rural versus cities. That's just about incompetence. That's just being bad at your job. And then you went to health insurance next, right? So health insurance, we have been told that Obamacare is a problem and that I have a plan that's coming out in 2 weeks for literally 10 years in a row. And we finally got the Trump healthcare plan last week. Do you know what it is? Assume we have a well-functioning health insurance market and go buy your own goddamn health insurance.
Mm-hmm.
I teach Economics 101. You will not pass my class. You can't just say, in a world in which our health insurance markets are wildly dysfunctional, let it rip, capitalism will fix it. There are thousands of health economists around the world who've studied this. It's one of the most complicated, messed up, difficult markets to make work. And his answer is, we're walking away, you guys figure it out.
Yeah. Let me throw one other thing at you, Justin, and that is, going along with your whole kind of pattern there. We're scared about infrastructure. That's what we're scared about. Number one, we've got the Biden bill, which, Kamala Harris never had the foresight to actually talk about in terms of infrastructure and how that affects rural. But this area is the one that really scares the hell out of me and a number of my buddies at farm. And that's the fact that every time he pokes China goes to Brazil and now Argentina. And the next thing you know, China is actually making an investment into those countries. They're actually building ports that they own. They're actually building rail that they're part ownership of. Once that infrastructure is in place, what will that do to the ag market as a whole? And you mentioned the troubles coming 10 years down the road. This is an example to me of what you were getting at.
Yeah. So you framed that as being a question about infrastructure. And I have to say back to you, of course, we had Infrastructure Week and we had it every week it literally became a joke, right? A meme. Things going wrong. Oh, don't worry, next week's Infrastructure Week. And he failed to deliver. But I understand your question actually as being one about isolationism. So Trump has a notion that America is big. We're the 800-pound gorilla, and all we need to do is beat our chest and then people will pay us tribute. That's sort of the underlying idea behind these trade wars. We can get more out of these other characters. The thing is, actually, America is a much smaller part of world trade than I think the president understands. Let me try and explain why. First of all, we are, 340 million people in a world of 8 billion. You might say, well, we're really important because we're rich. We are, but so are lots of other countries, and increasingly so is China, which is a cool billion right there. And the other thing is the US economy is actually a remarkably closed economy compared to other countries, which means we're actually a relatively small part of global trade. And so his idea was, I'm going to beat my chest, and if you can't do business with me, that's such a big threat that you're definitely going to come and pay me tribute. Instead, we've discovered that when we show ourselves to be an uncooperative, unwilling, uncertain, unclear trading partner, folks go looking somewhere else. It's the middle school lunchroom all over again. If you act like a jerk at the middle school lunchroom, people go sit at another table. And the rest of the world is sitting at these other tables. And Joel, you're describing infrastructure investments to help the rest of the world get on without the United States. And those are really smart investments for those other countries to be making because we've shown ourselves to be an unreliable partner. And so I absolutely agree that this is once you show yourself as an isolationist once, everyone's always going to be worried that you're going to revert to that again in the future. The American people, we, the voters, have shown ourselves to be unreliable because we elected an unreliable leader who wanted to isolate us from the rest of the world. We cannot easily unring that bell. And that's leading the rest of the world to make a lot of investments that exclude the United States. Supply chains are getting rewritten right now. Remember after COVID, we all talked about friendshoring and onshoring and moving business to more reliable places. Right now, the number one conversation happening in businesses elsewhere is how they can non-US shore. We've got to come up with a catchy word for that. And so, yeah, that's a real risk.
To play devil's advocate and just have you explain a little bit, it seems like every other week he announces some big investment that a foreign company is going to make in the United States, billions here and billions there, and no one's brought this amount of investment. Saudi Arabia is in town. They're trying to, trying to amp up their munitions and continue that which is an odd relationship that they have with the president of the United States. So if I'm devil's advocate, I say, hey, he's doing deals. People are coming to the United States to build factories to do the kinds of things that we want them to do.
Yeah. The truth here is strange. It's bizarre, and I've never been in a situation like this. The numbers that he's describing are literally made up.
No.
Donald Trump lied?
No, that wouldn't happen. Come on.
But Heidi, I'm not used to saying that because there were norms in American politics where you might cherry pick your truth, but you always told the truth. Yeah. But so Trump has this running tally of how much money he's made from other countries. So first of all, you don't make money from other countries, but that's a whole different question. So, for instance, let me tell you, I can't remember the exact number. It might be 600 billion. It might be $1 trillion, where he said the European Union, as part of their trade agreement, have committed to invest 600 billion in the United States. I think that's the number. You read the trade agreement and it just says European companies. First of all, the European Union can't do that. The European Union is a government. A government doesn't send money around the world. So what the trade agreement actually says is European companies will think about locating in the United States. They'll think about it.
They'll think about it. It's like China. They'll think about buying soybeans. They'll think about it.
The European Union literally cannot even force companies to do that because it's not a country. The German government would have to do that. The French government would have to do that. And so that 600 billion is part of his number, which last I checked the White House website was 17 trillion, but actually I heard overnight it raised to 21 trillion. It's actually really interesting. It always moves with his feelings. But I cannot tell you enough. I cannot enforce this enough to your audience. This is not a partisan talking point. This is a fact. The fact is he made the number up. And you can go and look for it, and you can go and find it. And the other thing is, not only is the number made up, it's implausible. Let me explain. Every year in the United States, we produce $30 trillion worth of stuff. The president says we have 21 trillion being invested. Now, the total amount of stuff we produce is the total amount we spend on investment plus the total amount we spend on consumption. So if the pie is 30 and 21 of it is building factories, that means that Americans are getting by on a very small amount of money. Like you and I can't afford dinner tonight. There's so little being spent on consumption. The number doesn't make sense on its face.
Yeah, well, none of this actually makes sense, whether it's stopping, are we up to 10 wars yet, or how many wars that have been prevented? I mean, we know this.
I have a question for both of you, though. This is the guy sitting next to you guys in the pickup where you're going to make that argument. And obviously, you're right. It isn't hard to see once you explain it. But, Donald Trump's going to look me in the eye and he's going to say, if I'm doing so bad, then why is the market doing so well? And so I'm going to throw that at you, Justin.
I love that question.
Why is the market doing so well?
So let me turn it around and ask you a question. Is the market doing so well?
I don't believe so, but, I get to play devil's advocate too.
Okay, so you would think that one way of thinking about this question would be to compare how the US market is doing to other countries. And it's funny that the media has almost not played this game at all. But if you look at this in a comparative perspective, stocks have risen much, much more rapidly in other countries. So since Inauguration Day, it turns out I've got the data in front of me because I'm that kind of nerd. Since Inauguration Day, the US stock market is up 13%. Oh, that sounds terrific. Must be, people say to me, well, how's this possible if you keep saying these are terrible policies? Well, let me tell you, since Inauguration Day, Spain's stock market is up 61%, Austria 58%, Finland 45%, Ireland 42%, Hong Kong 41%, Italy 39%, Portugal 35%, Belgium 33%, Singapore 29%, Japan 27%, the Netherlands 27%, Canada 24%. Poor Canada, who were beaten up at every point. Canada's market is doing nearly twice as well as the United States. Among industrialized countries, the stock market in the US has risen the least in the United States. We're only ahead of 3 countries. Okay, so first, one of them's my country, Australia, but it's pretty close. The US market's up 14, Australia's up 11. Let's call it a draw. New Zealand has been flat. Well, I'm an Australian. I can tell you New Zealand is a pack of losers. Who cares?
We get to say that about, whoa.
Yeah, well, I bet you have your enemies too, right, Heidi?
Yeah.
We do.
It's sort of like New York, Boston. Boston. Is there a North-South Dakota thing like that?
Yeah.
I was close to saying it,
I
but I'm
was
not
too,
going to.
I was too, but this is a national podcast, not a North Dakota podcast.
So go ahead and say,
let
because
me
I
just say
said it.
this. Where do you think Kristi Noem's from? So there's your answer.
It's the gift that keeps on giving. South Dakota's
Wow.
gift that keeps on giving.
Okay, so there's
I'm
one
curious
other
about
country
this.
that the US
one
market's
other
ahead
country.
of.
What's the other
And
one?
it's Denmark, and 60% of the Danish of the 40% of the Danish stock market is Novo Nordisk. So Denmark's economy is basically one company, which is basically one drug. So actually, the US market is well behind that in the rest of the world.
So let me ask this, and this isn't X's and O's and numbers on a sheet. I get that, but twice America elected this guy. Twice. What does the world think of us? What do world economists think of us? Are they just going to look at us and say, you know what? They're not serious. They're not intelligent enough to do business with.
So I don't know if you can tell, this is actually, my accent is not actually a South Dakota accent. So I do spend some time.
But I bet you it's not a New Zealand accent either.
And be careful around Kristi Noem, because, for all I know, you're handsome.
Is she New Zealander? She could be.
No.
I'm kidding. And sorry for swearing. Just New Zealand has got me riled up. The rest of the world is just looking on in utter amazement, bafflement.
So when you think about kinds of falls of great economies, great countries, and you think about kind of the beginning of the end, we start out with this idea that hubris, which is we are being taken advantage of, which is kind of this grievance thing that he's been able to tap into in middle America, that look what we've done for the rest of the world. And you look at, people say, oh, China's got to come to the table. I said, U.S. exports are less than 3% of the Chinese GDP. So, I mean, you don't over exaggerate, don't overplay your position. But I think the point is that there's got to be a pivot point here where we reunite kind of the idea of democracy with capitalism, with promoting opportunity, because one of the great things, I mean, you said already, our rule of law and the reliability of the ability to do a contract and have it enforced. But I also would include in that the opportunity that you have to own property, the opportunity in our country you have to basically, kind of jumpstart. And one of the things that you said is that most disturbing is that we have now played the game, the president has played the game that I now want to be revered by all the big guys. And in the meantime, the little guys aren't getting the opportunity. If you were going to fashion a policy, kind of looking at that fact for, let's say, a Democrat running for the Senate, what would you say? What policies would you bring to the forefront?
It's such a good question, Heidi. And it's such a great question. It's one of the reasons I admire you. And because
it's another reason why you're stalling for time in answering.
Well, and you didn't grow up with her, Justin,
enjoy the emotional.
I
want to enjoy the emotional moment, because actually you just hit on something that I think is deeply broken in left-leaning media. I get invited all day, every day to say what's wrong. And there's a lot. And it's really easy. I got 1,000,000 trillion talking points. And I can tell you, I do think the president has been very bad for the economy. I think the facts are on my side. I think economic theory is on my side. I think history is on my side. And I know how to marshal all of that and give this isn't working speech. And you said, hey, Juz, I'm going to put you in a room with a Democratic Senate candidate. What should they do? And I think it's really hard, because I assume you want me to think about the politics at the same time as the economics. So one of the most important tasks for the next administration is going to be to make more of our institutions bomb-proof. It turns out we're fortunate. We still have an independent Fed, but boy, it could be one Supreme Court case away from not being that way. We're fortunate that we have a functioning democracy, but that's mostly because elections are run at the state level, and that's actually intrinsically bomb-proof. And I want to make sure that we think about making more of those institutions absolutely populist bomb-proof, because those institutions are the things that make us rich rather than poor. It turns out it was an accident of history that Congress accidentally gave the White House more power over tariffs than it really ought to have. And most presidents have been pretty responsible with that power. Now, the Supreme Court might be about to come back and say, hey, you guys, you don't actually have that power. But thinking very carefully about delegated powers, I think, is really important. And of course, we always run the risk that we fight the last war. Mm-hmm. So we're going to spend the next, just like after the financial crisis, we spent 5 years trying to make sure that the financial system was bomb-proof. So I sort of gave you a list there. Let's try and make it so that America functions even if we have a subpar president. But it may be that it's other institutions that break next. For instance, I happen to think Mike Johnson's a terrible leader of the House. And it could be that we fix all the problems with the executive, and then it just makes it even more glaring what the problems are with the legislature. That's the point at which, Heidi, I'm going to defer to you. You know a little more about that than I do.
Well, we've run out of time, Justin, but we didn't even get to two of my favorite topics, which is the uncertainty that AI is
I love that question.
Sending out, especially among the job market. When you look at, like you said, people can find jobs, but people see the layoffs, they see this automation coming, and they know that eventually it's not just going to be, the radiologists that are going to get hit. Mm-hmm. It's going to be the truck drivers. It's going to be all the people. And the question is, when you have a president that is so transactional and not forward thinking, I don't think that people are getting prepared for this transition, what's going to happen. The other thing I want to talk about. Can I just take
10 seconds on that?
Yeah.
That's the argument we should be having. That's the debate we should be having. All the nonsense that we read and we wade through day in, day out, and the insults and all of that means that we've taken our eye off what is perhaps the most interesting economic challenge of a generation. So I love the fact you're looking at it and thinking about it.
Well, and the other thing that I'm deeply concerned about, which is, politically, cryptocurrency has gotten to be kind of everybody's darling because they're pouring tons of money into campaigns. And there really isn't a lot of discussion about what that looks like 10, 15 years from now.
Well, Justin, I will tell you, the thing that you said that bothered me the most, and I realize we're closing out, is the fact that you said it's not going to show itself up until about 10 years. And that's the image I had of the early 2000s. I saw a big kegger by George W. Bush, and I saw my party have to get out the vacuum cleaner and the mop and clean up that kegger. And here we sit again. It's easy to say, man, it was a great party if somebody else is picking up after it. And it scares the hell out of me. But Justin, thanks for joining us today on The Hot Dish.
It is really great. I hope you come back because we'd love to kind of delve into these issues a little bit more. And I know it gets a little wonky, but I think it's really important. And one of the things, Justin, that you said is, is really for any level of economists, it's really important to be honest. And I don't think that the economists that are heading up or working in this administration are very honest. And,
not at all.
Now they have to be when they reduce tariffs to lower coffee prices. But, that's a small step.
Reality does that. And Joel, I'm going to take that with me. And my job is to bring my mop. So I'll bring my mop next time.
Tell you what, Justin, I've been there, done that. I'm going to enjoy the kegger first, but I'll help you clean up.
I was going to say, he didn't, it wasn't like he didn't make the mess.
Thanks, Justin. Thanks for coming on.
Thanks, Justin, so much. Thank you for joining us today on The Hot Dish, brought to you by One Country Project, making sure the voices of the rest of us are heard in Washington.
Learn more about One Country at onecountryproject.org. That's onecountryproject.org. We'll be back next week with more Hot Dish, comfort food for rural America.
Topica.